All right, joining me is James Seyffart, research analyst with Bloomberg Intelligence, who everyone obviously knows who Bloomberg is, but I'll just tell you, James is simply one of the best in the business covering ETFs. And I would say particularly so when it comes to crypto ETFs. And that's obviously going to be the topic of our conversation today. James, it is always a pleasure. How have you been, man?
I've been good. Thank you very much for having me. Thank you for the overly kind introduction there. I appreciate it.
You,
Coming from you. That means a lot. So thank you.
I was thinking back, it's hard to believe. So a year ago, you and I were waist deep in covering the launch of spot Bitcoin ETFs. And I think I've been involved in ETFs for over 16 years now, going on 17 years. I don't think I've ever had more fun covering ETFs than over the past year. I'm assuming you would say the same.
Yeah, that leading up to that launch, even the Ethereum ETFs to a lesser extent, but leading up to that launch of the Bitcoin ETFs was, yeah, unlike anything I've experienced. And it was like mainstream news. Like I was getting calls I was like talking to people from like CNN and like, I was like, this is crazy. Like they actually care about this. New York Times, you name it. Any sort of media was reaching out to, talk to me and ask questions.
Yeah, it was so much fun. I feel like I've had a little bit of the cold turkey feeling, although we have enough on the plate moving forward, which we're going to talk about on the crypto sphere. So I think we're going to have a fun year in store for 2025. But here's what I thought we might do. I want to take this in three pieces. So I do want to spend a few minutes just looking back on the year we experienced with crypto ETFs. Really, just get a few final words from you on everything that we saw transpire. So we won't spend too much time there. And then I have a few, I guess, what I'll call current crypto ETF topics we can dive into, including these leverage micro strategy ETFs. I have to ask you about those. And then we can spend probably the majority of our time looking ahead, which I think is really what people want to hear about, if that works for you.
That works for me. I'm looking forward
Okay,
to it.
so I think most people by now are obviously very aware of all the ridiculous numbers spot Bitcoin ETFs have put up, right? Especially anyone who follows you and I and Eric on X. I know I've beaten all the numbers into the ground, something like what, $36 billion dollars in net inflows. The category overall is over $110 billion dollars. It looks like it'll probably track down physical gold ETFs here pretty soon, which those things have been around for over 20 years at this point. And, as I look back, James, I think you and I were both very bullish on demand coming in. I would say more so than most analysts. But if I'm being honest, the numbers these things put up, they exceeded even my expectations. I've got to be honest with that. I'm assuming that you would say the same.
Yeah, I mean, like you said, you were right in our camp, right? Like we were very bullish on these Bitcoin ETFs, and like I had people from like our more traditional world that are like, there is no way. Like they were like taking the way under. They did not think it was going to happen. I will admit there were some crypto people throwing out numbers that were just absolutely outlandish, like $100 billion of inflows. Granted, we are over 100 billion in assets, and if you asked me that, I would not have bet on it. I would have said Bitcoin needs to like triple, but that's actually it kind of has, but yeah, overall, it's just even smashed my very high expectations that I took a lot of flack for saying a little over a year ago. So, yeah, and now I'm getting flack for not being bullish enough, I guess, on the flows and assets going forward.
Let me ask you this: besides the numbers that spot Bitcoin ETFs put up, did anything else stand out to you over the past year, whether that be in a good way or bad way? Just again, you and I, we've beaten these numbers into the ground. Anything besides that stood out to you?
I mean, the number one thing is the stickiness, right? Like my expectation was these things would take in a lot of money. At least for the first year or two, they would be like you'd see massive outflows at times when price it's volatile. It's a volatile asset class. But we have seen outflows, and they're currently going through a bout of outflows for the most part. But like the vast majority, we're talking 97% of these assets are staying put that come in over a given time period. So I mean that's the one thing that has stuck out to me. I mean they have like 1.15 million Bitcoin, or it might be a little lower now after some outflows, but that they surpassed Satoshi as a group. BlackRock on its own is like going after Satoshi at the way it's growing. I mean, just these numbers are not anything that I would have expected. And then the other thing that really shocked me was I thought the options market would be very successful, But honestly, IBIT's options are even blowing my expectations out of the water. I mean, they're like institutionally liquid, like only a month after launch, 2 months after launching, whatever it's been. And they are, ironically enough, IBIT is owning the market for the most part. There's plenty of assets to go around for everyone. But as far as volume and trading goes, IBIT's dominating. So I thought I knew there would be one leader. I thought maybe there could be two leaders. But as is the case with most ETF categories, one person's running away with the volume and assets and things like that, and that's BlackRock's iShares Bitcoin ETF IBIT.
By the way, to your point on the stickiness of the assets, it's funny because we'll see like, 5 straight days of inflows into spot Bitcoin ETFs, $1 billion, and then you'll get one day where there are fairly sizable outflows, and everybody's like, "Here we go!" Right?
Yeah.
The whole category is going to roll over. We're going to see these massive outflows moving forward.
Yeah, everyone's saying that retail investors, these investors are going to have soft hands and sell at the first sign of weakness. And like one of the things that I feel like Balchunas and I specifically have been like arguing with people in this world, like ETF investors, as you know as well as anyone, do not have soft hands. Like a lot of these guys are bogleheads; they're set it and forget it. Most people are not putting like 50% of their net worth into these Bitcoin ETFs. It's a satellite position. They know it's volatile. They're putting it in as hot sauce in their portfolio. They're putting it as a hedge against currency debasement. You name it. So like they're not just dumping these things at the first sign of worry, because if you went in, you probably know that this thing has multiple 80% drawdowns. And I hope anyone looking at investing in this asset class should know that you could be subject to severe drawdowns if you're investing.
Yeah, have you been surprised to see some fairly prominent people in TradFi that are almost angry that spot Bitcoin ETFs have performed so well, in terms of flows and that the flows are sticky? I was a little surprised by that. I wasn't expecting that.
I wasn't surprised because I've seen it already from crypto even before the ETFs launched, and there's this thing where the earlier you were to Bitcoin, particularly if you were negative on it. So the people who were like thought it wasn't going to have any substance or use case back in like 2013 or prior, if they didn't change their minds, they just get further and further into like really hating it. And so like any success that it has, like it just like aggravates these people, and they just like there's no turning back at that point. So yeah, and that's been the case for the ETFs. There's been a lot of people calling for their death, saying they're not going to be successful. There's not going to be a lot of demand, and all of that has been proven completely false. So I think it goes like once you go out on a limb and say you're against something, it's hard to like kind of. There are plenty of people that have gone back and been like, you know what, I actually do like this asset. I think it has useful use cases for X, Y, or Z, what have you. I mean, Michael Saylor, for example, he was very anti. There's plenty of people that were very anti and ultimately changed their minds. I would argue I was in that same camp. So I don't know. I think it's just the earlier you were, you didn't bet on it, you're watching it run up, you just get angrier and angrier at it. So seeing the success just bothers you.
It's been so interesting to watch. Okay, so that's spot Bitcoin ETFs. Let's briefly talk about spot Ether ETFs. And I don't want to speak for you, but my sense was that I had at least a little more optimism that these would be approved at the time they were. You can correct me if I'm wrong, but then I would say I definitely overestimated initial demand. Whereas I know you and your colleague Eric Balchunas, you were much more conservative here. Just looking back, I mean, what stands out to you on spot Ether ETFs, which of course those launched in late July versus the Bitcoin ETFs, which launched in January?
Yeah, so actually, I mean, I'll give Eric credit where credit is due. He was even more bearish than I was. I thought like 20% made sense. Or now he was saying 10 to 15, 10 to 20% of the flows, of Bitcoin ETFs. So we are well below that still. But the one thing I will point out is one, it went to a slow start. And I was saying this from the get go. One, we can get into this later, but they don't have staking, which is a huge critical thing for Ethereum ETFs. You're giving up a certain percentage of yield, whatever it may be, to go into an ETF. You're paying a fee for that. It launched in the doldrums of the summer. Like there just wasn't a lot going on. The market was sideways. That did not happen for the Bitcoin ETF launch. They launched into like a raging bull market essentially. So there just wasn't a lot of interest. There wasn't a lot of things happening at the time. So I think all of that contributed. There's a whole host of other things that we can get into, but like a lot of people, I think also like it happened so quickly with right after the Bitcoin ETF launch that like, you know, had it not been approved in May the way it was and launched in July, and it didn't get approved till like now or like this month, like I think you'd have a much more successful launch just because people would have time to digest, the Bitcoin ETF launch would have time to figure out. But like anyone who's doing this, like, oh, I just put a 1% of my portfolio into Bitcoin. Do I really need to add anything else? I already have exposure to crypto, which obviously they're very different assets. That's not really, but I think that's what happened to a lot of people. But the one thing I will say, they've taken in like 3 billion since the day of the election. Like it was like the day of the election, Trump won, and money just started pouring in. So these things had net outflows in the like $600 million range, $700 million range. And then right literally the day of the election in the beginning of November, like flows just started pouring in. And now we basically had $3 billion, over a $3 billion swing since then. So I mean money's pouring in now. And I think that's going to continue personally. I think a lot of the things that Ethereum could be used for, smart contracts, all these true decentralized finance, the SEC wasn't going to allow any of that to happen under Gary Gensler. So I think part of the reason is people are optimistic about what this SEC is going to allow to occur on Ethereum in decentralized finance, and they're betting on the biggest player in that space right now, which is Ethereum. And maybe it's people trying to diversify some of their Bitcoin holdings. A lot of people in TradFi try to think about this as like an index of investments. So I think a whole host of things. But the one thing I almost pointed this out that shocked me was I thought there would be flows that came in after a Trump victory, but this has even exceeded my expectations after that because I guess I was just so it didn't look great seeing the massive outflows from the Ethereum launches.
Yeah, I'll just add 2 points. I agree with everything that you said. I think, first of all, if you look at the iShares Ethereum ETF, ETHA, that ended up finishing in the top three of all ETF launches in 2024. We're talking out of like 750 new ETFs coming to market. So clearly that's remarkable. And then I 100% agree just in terms of the timing of when these launched. Bitcoin ETFs really sucked a lot of the oxygen out of the room. And even though, as you pointed out, we're talking about two completely different assets here in Bitcoin and Ether, the way advisors looked at this is, okay, I have my crypto allocation, at least the early adopters, the advisors who were initially going to jump on the crypto train, they allocated to the spot Bitcoin ETFs, and then they really didn't have that allocation budget in their portfolios for Ether. So I think that'll evolve. I think there's a huge educational hurdle here too. People have to learn what Ether is. I know you and Eric have talked a lot about Bitcoin and digital gold. That's a really easy, selling point. It's really easy for advisors to get their head around. Ether is much more of a technology play. It's not necessarily as intuitive. So I think you're right on all of those fronts.
I want to add to what you're saying about ETHA. So I did basically on the anniversary of the Bitcoin ETFs. I looked at every launch of ETFs in the U.S. and inflation adjusted the assets 1 year after their launch. And four of the Bitcoin ETFs are in the top 20 of all time. And one of the reasons I beat Grayscale's BTC, their mini trust, on if I included that, but that didn't launch till July, so I kind of excluded because it hasn't been a year out. That would be in the top 20 as well. ETHA, the iShares Ethereum ETF, would be in the top 30, top 20 as well. Some of the other ETFs like Grayscale's mini ETH ETF would also be in there. So like if we go a year out and like 7 months from now, right, and I do the same analysis and you look at the top 20, top 30, it's going to be like literally half Bitcoin and Ethereum ETFs. So I mean that just that that kind of boggles the mind when I think about it that way.
All right. Before we move on, and because I want to talk about a couple of current crypto-related topics in the ETF space, anything else you would highlight in terms of looking back on the past year in crypto ETFs? Like, did you have Vanguard gaining access to spot Bitcoin and Ether ETFs? Was that on your bingo card?
No, I still think that's a mistake. I mean, they were out today basically saying it has no place in any sort of investment portfolio. I get it. Like it goes, they don't like gold either, but they didn't stop people from buying gold ETFs. Like I think that was personally, I view that as a mistake on their part. Like allow your investors to choose what they want to invest in. Like I'm not saying they should have offered an ETF for that. I mean, if you had asked me, I would have bet any amount of money that they weren't going to launch a Bitcoin ETF just because of their stance on gold. But yeah, I didn't see that coming. And then like going forward, the one thing I would say in relation to our topic about gold is like we think that Bitcoin ETFs are going to be 3 times the size of gold ETFs, largely because one, they're competing with them, yes, in this the narrative around currency debasement, store of value potential. But also like it has a benefit that gold doesn't, in that it's like also hot sauce on your portfolio. It's very volatile. And so like people, there's multiple use cases for Bitcoin in a portfolio. Particularly, it used to be rather uncorrelated. It's not uncorrelated right now. It tends to be very correlated with risk assets like stocks. So I guess that would be another thing. I didn't necessarily see the how strong the correlation would be with stocks still continuing. I thought that would kind of come in and out, but for the most part, it's if you're a huge believer in Bitcoin or bullish on Bitcoin, you probably don't like to see how correlated it's been in recent months and years.
To your point on Vanguard, I'll just say in today's day and age, I don't think you can tell investors what they should and should not be investing in. And so I completely agree with you in that that's perfectly fine if Vanguard doesn't want to offer spot Bitcoin and spot Ether ETFs themselves, but to gate access, I think that rubs investors the wrong way. And like I think of myself, James, I love investing in low cost stock and bond funds, such as what Vanguard has, but maybe I want to have a little crypto in my portfolio. And I think that's a case, I may be a little bit older, but if you talk to a lot of younger investors, I think a lot of younger investors, crypto is a normal part of their portfolio when they think of their allocation. And you're basically alienating that entire generation of investors by telling them, okay, we're going to be your parents and slap your hand or not allow you to invest in what you want. I just think, again, in today's day and age, it's all about access. And if you're getting that access, I just think it's a bad look. It'll be interesting to see if they capitulate.
I think they need to capitulate personally.
Yeah.
I think it's a little crazy. I mean, it's the Securities and Exchange Commission has allowed it for listing on U.S. exchanges. Like, I'm not saying everyone maybe have them like go through some process, like confirming you understand the risk before you buy it in a way that you wouldn't have them, go through some process to buy, VU, their S&P 500 ETF. Like, there's other ways you can go about this rather than like completely just gating it for everyone. And they didn't do it for the futures ETFs when they launched, and then all of a sudden they did it when the spot ETFs launched, and then they went back and did it for the futures ETF. So it was like I don't know. I just the whole thing just doesn't smell right to me, particularly in this day and age.
All right. You mentioned having investors like confirm they understand the risks of investing in ETFs. I have to ask you about these leverage micro strategy ETFs. So as you know, there's one from RecShares. There's another one from Defiance. And I guess I'll just ask you, James. I mean, do you think there is any chance that these could go bust this year? That these things could implode?
Um, I mean, it's certainly possible. Like if I had to pick an ETF that could completely go belly up, like it would be single stock ETFs for sure, and it would be the leverage single stock ETFs, right? So I mean, there's no way to say like, oh, this is 100% going to happen. I mean, it's kind of hard. You need a essentially like a basically 50% drawdown on a single day with the way that these operate. But these things have $3.2 billion in them. So I mean, that's $6.4 billion of exposure on a $70 billion company. I mean, it's a meaningful impact. And Saylor, he loves it because it increases the volatility and allows him to sell more bonds, convertible bonds at 0% interest, things like that. So he likes having them. He likes the increased volatility of the stock, and he thinks it allows him to buy more Bitcoin. But to your point, like, yeah, there's definitely some risk. And also there's been issues this year with them tracking the 2x exactly because banks won't usually the way these leverage ETFs work, which you've talked about plenty of times in your ETF Prime and other things, but they generate their daily swaps with a bank. So a bank is guaranteeing 2x the return of some underlying asset. In this case, it's MicroStrategy. And they basically were like, no mas, like we can't give you this exact coverage anymore. So what they've had to do is they've kind of had to go out and use options to do this. And so it doesn't give you the exact on a daily basis, like the 2x return, but it's pretty damn close. So, I mean, they're very risky products. I am personally of the opinion, like the ETF industry is a big tent. Maybe we call these things, I know that iShares and BlackRock wants to call them something different. I can get behind something like that, calling them exchange traded instruments rather than ETFs. So it doesn't like, these things are not, VU or VTI or iShares is, SPY, these things like that, IVV. Those are very basic hold of stocks. These things are holding one stock. They're highly levered. They're highly volatile. And again, if they go up 50% or down 50%, whatever happens to this stock, the inverse or long could blow up and implode because theoretically you get rid of your entire value. So, I mean, it's possible. We saw it with the VIX ETFs. We've seen it with ETNs in the past. I don't know. I wouldn't say it's likely just because 50% in a single day move is kind of crazy, but Bitcoin's kind of crazy and MicroStrategy is like a levered bet on Bitcoin. So this is basically like a multi-levered bet on Bitcoin in a way, though there's obviously idiosyncratic risks for MicroStrategy specifically. But yeah, I mean, this would probably be at the top of the list if I had to pick ETFs that could go belly up.
Well, I don't know if you're in front of a terminal right now, but if you look at the performance of, say, MSTU or MSTX here recently, those have been down 40, 45% plus. And that's in a pretty vanilla market, I would say.
Yeah.
Right. I mean, Bitcoin, it's down a little bit, but it's not like the bottom has fallen out. And I would say the same in the broader market. And I just wonder if you get, certainly if you got a 50% down day, that would do it. But what if you string together a few days where you have a substantial decline? I mean, that theoretically could do it. And then you get into that feedback loop too, where, if you have a huge down move, you're selling exposure into that. I could just see a vicious circle. And by the way, before all the MicroStrategy fans on X blow me up, this is no sort of statement on the company and what they're doing. And Michael Saylor, I think Michael Saylor has been a tremendous advocate for Bitcoin and clearly helping educate around it. So please don't come at me on that. That's not what I'm talking about here. What I'm talking about here is math. That's all I'm talking about.
Yeah, I mean, this has happened. There's 3x ETFs out there, right? We've seen things where it just keeps trending and it keeps going down. Like if you were in the 2-3x Qs, like you got crushed. And what they do is they just split the share price, or reverse split, whatever
Reverse
you have
split
to do.
it.
So
Yep.
it gets you reverse split it or you split it depending which direction you're going. So I think what you're talking about, the long, slow, like bleed out, like that's standard, and they know how to handle those. And what tends to happen, so like most ETFs, your traditional equity ETFs, the average trend is as price goes up, more money comes in. Like ETFs overall, when we have a really good bull market, that's when we break records. That's why we saw $1 trillion of flows in 2024. But what we see with these leverage products, a lot of times commodity products fall in this that use futures, anything like this, it's kind of the opposite. Like as things go really far down, money starts to pour in trying to bet at a bottom. And usually as these things really skyrocket, like these 2x long MicroStrategy ETFs haven't over the last while, money tends to come out. Now that's not exactly happening right now. Maybe it's early. It's like particularly volatile and interesting to certain people, but over the I think longer term stuff, like where it just keeps going up, if you're inverse and you're losing money, I don't think that's going to cause it to implode. I mean, they could get really low in assets and maybe force closure, but I think it'll be volatile enough that will be people betting it on both sides. So I think the real concern is something like a 50% move in the underlying stock
Yeah.
on a 1 day basis,
Either
which
way,
is
we'll put
not
out
out
a,
of the question.
not out of the question, but I'm going to offer a PSA for people who aren't familiar with how daily reset leveraged ETFs work. If you have a daily reset leverage ETF, particularly in a high volatility stock like MicroStrategy, and you buy and hold that over a long period of time, you will get that decay. It's going to be very difficult for it to track and they're path dependent, right? So if MicroStrategy went up in a straight line, great, but that's likely not not what's going to happen, right? You're going to get a lot of chop, and so you're going to get a decay in that ETF. So, okay, one other real quick current topic I want to ask you about, James, because I want to make sure we get to some topics here moving forward. These crypto index ETFs from Hashdex and Franklin, which I assume they should be launching fairly soon, right? Because the 19B4s on these have been approved. Initially, these would own only Bitcoin and Ether. Down the road, as more digital assets, are approved, they could own those. But I guess A, do you expect these to launch pretty soon? And then B, do you think there will be a demand for these?
Yeah, so I actually wrote my 2025 outlook like a couple days before these got approved, and I basically said they were going to be approved, and I thought they were going to launch in the first quarter. I would be surprised if they don't launch in the near future. I think everything's ready to go. I mean, with like you said, they're only going to hold Bitcoin and Ethereum. They both have the option to add other assets as they're theoretically approved by the SEC. So yeah, I think they're going to launch. As far as like how much interest there's going to be, I don't know. Like if you look at one trend that is evident in all of ETFs, no matter how you slice it, whether you're looking at the S&P 500, even the sector stocks. So if you're going to choose sectors to break down your S&P 500, those have tons of assets because people like to choose their sector rotations. Particularly if you're looking at like global equity ETFs. Like if you look at the global equity ETF that holds the U.S. market and the whole international market, there's a lot of money in there, right? But if you combine the like international ETF with the domestic ETFs, it absolutely dwarfs the total money that goes into there because people like to control how much exposure they have. So I think for a certain subset of people that just want to own it in a market cap weighted portfolio or potentially equal weight, there's different options out there that could come out. Yeah, this might be an easy buy, set it and forget it. But I think particularly for advisors, they're going to like to be able to, control how much of Bitcoin or Ethereum they hold. So I don't think they'll be nearly as successful as the individual Bitcoin and Ethereum ETFs, but I think they'll definitely find success. I mean, if you look at Betterment, which is one of the largest, automated uh, advisor network platforms out there, robo advisor, sorry, I couldn't remember the name for a second. Like they have a thing out there now where they just invest in a market cap weighted portfolio of Bitcoin and Ethereum for you, and you can just set it and forget it. And that I would love to see what Betterment says, how much money people are putting into something like that, because that could give us an inkling of what's going on with these ETFs. But yeah, I think there'll be success. I just don't think it's going to be anywhere near the success of what we've seen.
Yeah, I think I largely agree with that. I think, as you know, advisors do love diversification. And like we were talking about earlier, if you just want an easy button approach, you want to allocate to multiple crypto assets, obviously this will allow you to do that. But I also agree with you that we know a lot of advisors like to have full control and they want to show that they're offering value. So maybe that'll, stunt demand there a little bit. Okay, let's get to what I know everyone wants to hear. Let's look ahead to this year. And obviously, we have what appears to be a much more crypto friendly regulatory backdrop. This could really be a 180 from what we saw under the previous administration. And so let's do this. Let me start with what I think is the easy stuff, and then we can get into some of the ETF filings out there and whatnot. And so, first, let me just rattle off a couple of things here: in kind creation and redemption for spot Bitcoin and spot Ether ETFs, options trading for spot Ether ETFs, and staking in Ether ETFs. Is all of that a layup this year? Do you think all of that will be approved? I think it will, but what do you think?
Uh, I don't think it's a layup necessarily. I think it'll eventually, everything you just said, I think is eventually going to happen, right? I don't know that it's definitely going to happen in 2025. The one thing I would like to point out, though, is like you and I have been saying this, like I equate it, that meme from, I'm blanking on it. I feel like I'm taking crazy pills here. Um, Watching the SEC interact with this entire space over the last 3 years has been mind-boggling to me because I'm used to seeing them like it all makes sense, everything they're doing makes sense, and then starting in 2021, I was like, what is happening with this space? And we just got a lawsuit where Coinbase beat the SEC, and basically the court said that the SEC acted arbitrarily and capriciously, which is how we got the Bitcoin ETF, the same lawsuit outcome, and they basically were not offering, there was no clear reason why they were going after these people in lawsuits. Everyone was trying to come in and register, they wouldn't let them because there was no way to do it, and basically calling out the SEC, saying that they don't need to create new rules and regulations for these things because the current rules work, is absolutely ridiculous. Like if you run and read this document, I highly suggest you read it because it is a scathing rebuke of everything the SEC has done. That said, who knows how pro this new SEC is going to be, right? I do think we're going to get spot Ethereum options contracts, which is going to lead to things like other defined outcome Ethereum ETFs. We're going to have defined outcome or buffered Bitcoin ETFs. Calamos is launching next week or the week after. There's a whole host of different things you can launch off the back of that. I think we're going to get in-kind create redeem for these spot Bitcoin and spot Ethereum ETFs. And I think we're going to see altcoins. Now, the altcoin question might not happen in 2025. There's a lot of legal things that need to kind of be sorted out. Like if you look at, the current SEC division of enforcement, there's a bunch of divisions at the SEC. Two of them are the ones that really determine what launches. But this SEC division of enforcement has these lawsuits out there against Coinbase, against Kraken, have all these Wells notices out there threatening to sue people, calling Solana a security, calling XRP a security in varying ways. And like, you can't have like the division of investment management, corporate finance, trading and markets. Like you can't have these guys looking at this stuff while the other division technically has outstanding lawsuits calling these securities. So I think they need to sort that out. I don't know how quickly Paul Atkins, assume he gets in as quickly as possible, I don't even know how quickly once he's in the SEC, they can like figure out, settle those lawsuits, drop them, what have you, before you can even start talking about potentially getting these other altcoins in there. So, I mean, there's a whole host of things that I'm expecting to happen. I just don't know about the exact timeline, but I think a lot of it's going to happen, and I think it'll happen in 2025. But the things like a Solana ETF or an XRP ETF or some of these other altcoin ETFs, that might not happen in 2025, particularly because once you file, it's like a 240, 260-day time period. And if we have to wait for people to file into like mid-year, then we might be waiting until 2026.
I won't pin you down on specific odds. You can do that on your own, but just for everybody listening and watching, we have spot Solana ETF filings, spot XRP, spot HBAR, or spot Litecoin. We have these crypto index funds from Grayscale and Bitwise that would hold digital assets beyond just Bitcoin and Ether, right? Those would be uplistings or conversions. I guess, James, just lay out the chessboard for us. I mean, you mentioned the enforcement actions as it pertains to Solana and XRP. That makes sense to me. Like, what specifically needs to happen? How do you think this will play out? Is it just more time? And let me also say, like, I agree with you. We don't know exactly how the Trump administration is going to approach everything in crypto. But I think you and I both go off actions. I'm much bigger off actions than words. And you mentioned Paul Atkins, who's going to succeed Gary Gensler. We know that he is viewed as being much more pro crypto or crypto friendly. We have this crypto advisory council being put together. You have David Sachs as this crypto czar. So the early indications are that the Trump administration is going to be much more crypto or pro crypto. And so if that's the case, is it just time? Like, I agree. The SEC, they have very specific ways of going about doing things and very specific approval process, whether or not they're, pro or anti crypto. And so is it just working these things through the system, or are there specific milestones or checkpoints that you're looking for?
Yeah. So, oh my God, we could talk about this for an hour. But I'll try to shorten it up as much as possible. So you mentioned HBAR and Litecoin. I think those would get approved even like almost immediately. But if Canary, who is run by Steve McClurg, former he was at Valkyrie and now he's at his own shop called Canary. I think those things would get approved because nowhere does the SEC call them securities. I don't think anyone would really argue Litecoin is a security. The problem is what we can get into the futures listing stuff. But I think basically right now, HBAR and Litecoin would have a very good shot of getting approved before the others. The problem is, like, is there any demand for a Litecoin and HBAR ETF? I don't know how much demand there is. They are heavily traded on traditional spot exchanges, particularly HBAR in Korea. It's one of the most traded cryptos over there. So like there are like potential ways to like launch these things. I think those could get approved because they don't have to deal with those legal things first. The way that spot Bitcoin and spot Ethereum ETFs were launched, let's save the futures market for a bit, actually. But then I'll move to the index ETFs. So you have the uplistings, like you said, of GDLC, which is Grayscale's large cap crypto index, and the Bitwise 10 crypto index. So basically, I think those have a decent shot of getting approved. Their deadlines are in July 2nd and July 31st. I think they benefit from the fact that, so in the case of GTLC, right now 90% of the assets are in Bitcoin and Ethereum in that fund. So they do hold Solana, they do hold Avalanche, and they hold Ripple or XRP in there as well and for Grayscale, but that's still 90% Bitcoin and Ethereum. And a lot of things in the SEC world, it's like you have to hold at least 80% in XYZ assets or something along those lines. So I think they might be able to sneak by on the fact that like 80% of it is in things that are already blatantly approved. And then it's basically the same argument for the Bitwise option, though it's a little less. They have 86, 87% in Bitcoin and Ethereum. They hold way more. They hold Solana, Avalanche, Cardano, Chainlink, Polkadot, all these other things. We don't need to get all of it. But I think those have a decent shot of getting approved this year under this new SEC. And then so if we go back to like Bitcoin and Ethereum, they were approved. You've talked about it a bajillion times, right? They use the CME market because trading in markets wants to find something they can monitor and surveil for potential fraud and manipulation. That's how we got Bitcoin and Ethereum. That's not how we're going to get these other assets, in my opinion. So I think we had BlackRock when they initially filed for IBIT, they included a surveillance sharing agreement language with Coinbase. I think we're going to need basically surveillance sharing agreements with these spot exchanges to get some of these other altcoins listed, because the division of trading and markets isn't. I don't think they're just going to let these things list without having some way to properly surveil the underlying markets. And then you come back to the fact that they currently have active lawsuits against Coinbase and Kraken. There's stuff going on with Gemini, Binance, you name all these things. There are plenty of issues that need to be cleared up before, I think that's part of the reason that the SEC didn't allow the SSA. So what ended up happening, I'm not sure if you were in this camp, but I was like, the SSAs are great. This is going to help. That plus the futures market should be enough to get these things through. That was one of the reasons we were bullish early on. And the SEC was like, no, we don't even want the SSA. We'll just use the CME futures market to surveil. And I think part of the reason they did that is because they didn't want to legitimize Coinbase's, exchange. The only thing that they are allowing Coinbase to trade for the most part and not suing them over at this point is Bitcoin and Ethereum. Everything else they have a problem with. So, or almost everything else. So yeah, I think there's a lot of things that need to be sorted out with SSAs, legal things, all that stuff before we start to see other types of products.
All right, I'll offer a few comments here. Like you said, you and I could talk about this for hours on end. Going back to your point on the Grayscale and Bitwise crypto index funds, I agree with you. I think what they're trying to do is take advantage of that 15% rule where they can own up to 15% in assets deemed illiquid. And so to your point, if you look at the composition of those funds, they're primarily Bitcoin and Ether. And then the Grayscale fund also owns Solana, XRP, Cardano, I think you mentioned. And then the Bitwise fund has Avalanche and Chainlink and whatnot. But I think that's what they're trying to do. And I agree with you. I think they may have a path there. On the surveillance sharing agreements, yeah, I mean, the issue is that right now, as we sit here today, Coinbase and these other crypto exchanges are still technically unregulated. Now, with the new administration coming in, could maybe that be cleared up? Yes, I think that's possible. But until we see that, I don't know that the SSAs are some linchpin here to approval. And then the other thing that I'll mention is the futures market, which you were alluding to. There's nothing that says you need to have regulated futures trading in order to have spot ETFs. I think what needs to happen here, which I'm pretty sure you agree on, is pretty quickly we just need to have regulatory clarity on which digital asset is a security and which digital asset is a non-security commodity. I just don't know how quickly that can happen. And maybe that supports what you were saying earlier in terms of the timing of approval on some of these different spot ETFs. I think that if we were to get clarity on that sooner rather than later, then this is going to go fast. I think very quickly you'll see these products rolling out. And then I'm jumping around here. I did want to ask you, when we talk about futures, James, I'm sure you saw volatility shares. They filed for these Solana futures ETFs, even though we don't have regulated Solana futures at this point in time. Did you make anything of that?
Yeah. So on your comments around what is security and not a commodity, I would say another thing I say in all my notes when I talk about this is some sort of market structure bill from Congress will go a long way in making this stuff happen and go faster.
That's everything, right?
Yeah, that'll clear all this stuff up. But I also think a better people running the CFTC and SEC actually working together, maybe they come up with rules that are the rules of the road until Congress comes up with something. So it could happen before that, because no one wants to wait for Congress to get something done before you can get this stuff, because then we might be waiting a very long time. As far as the volatility shares filing, I didn't assign too much to it. I think it's interesting. We've been hearing rumors for a while, and I've talked to plenty of people. The people wanted to launch a Solana's futures market on the CME. And I don't know this for sure, but my assumption is the SEC put a stop to it. So essentially, when you register to list CME or futures contracts with the CFTC, you have to kind of say what kind of contracts it is. So is it a commodities contract? Is it a securities contract? There's 4 or 5 different options. And Bitcoin and Ethereum, when those futures were listed as traditional commodities futures contracts. if you check securities, then you need both the SEC and a CFTC approval. Anyone launching Solana is not going to try to say they're securities futures contracts. So I think the SEC basically, if you launch securities futures, you report you're covered by both those things. And the SEC is just like, we're not letting these launch unless they're securities futures. And they're like, well, these aren't securities futures, so they just don't happen. So maybe they get launched. I would not. I would be very surprised if they don't get launched in 2025. I would expect Solana futures to launch again, probably before we even get spot Solana ETFs. I think all of this, everything we're talking about right now, for the most part, I think it's all going to happen. It's just, is it going to happen in 25, 26, or possibly even later? That's a different question. So matter of when, not if, as far as I'm concerned.
Yeah, you mentioned a market structure, Bill, and obviously, if you had clear classification over which digital assets are securities versus non-security commodities, then that'll also dictate jurisdiction, right? SEC versus CFTC. And I wondered if maybe vol shares is betting on obviously Solana being under the purview of the CFTC. And so this was sort of an early call on that. We'll see. Real quick before I let you go, when those vol shares Solana futures ETF filings came out, we had this flurry at the end of December when everybody was on vacation. All these ETF filings came out. So there were filings from Strive and Rex shares on these, I'm going to call them Bitcoin bond ETFs. These would hold convertible bonds from companies buying Bitcoin, like obviously MicroStrategy. Bitwise has a filing for an ETF that would own companies holding at least 1,000 Bitcoin on their balance sheet. ProShares, they had filings for ETFs holding the S&P 500 and NASDAQ 100 in gold, but they'd be denominated in Bitcoin. There were already some filings out there from an issuer called 1+1. I'll just throw these all out at you. Anything particularly interesting to you? Any high-level thoughts? Is this we're just going to see a proliferation of crypto products coming to market?
I'm going to throw out another one before I even answer it. Also on New Year's Eve, Nasdaq and BlackRock filed to increase the position limits on the options contract. So we talked about the options launch and having huge success, but like they have the lowest limit possible, despite being how liquid these ETFs are. So the SEC basically singled these things out again, saying they were worried about fraud and manipulation before they launched the options contracts, and had super low limits. And basically this filing, it's a 19B4, they're requesting that the limits be raised to the highest position limit that they offer for options contracts. So I think that's critical. I think that's going to happen. And we'll see more ETFs that use things like Bitcoin ETF options in them, weather defined outcome, covered calls, put right strategies, all these things on Bitcoin. We're going to see tons of ETFs that do all this stuff. On the Rex shares and Strive filings for Bitcoin bond ETFs, I mean, honestly, overall, I think we're going to see a ton of ETFs launch in this whole space, right? I think even the ones that already exist, Block is the main one from Amplify. I think we're also going to see I think we'll likely see some IPOs and M&A in the space. So we'll see more companies that will buy. We're going to see more companies put this stuff on their balance sheet that can be put into these cryptocurrency ETFs, like Bitwise is filing the Bitcoin standard ETF. So like if you have Bitcoin on your balance sheet, you can be added. I don't remember what the exact dollar amount, but there's a dollar amount limit. You're going to see all these crypto thematic equity ETFs and apparently bond ETFs that are going to offer exposure in different ways. And like the way that Saylor talks about what he's doing, he's like offering super volatile leverage bet via his stock. He's offering the convertible bonds, which is like, it's like taking like converting down the energy of Bitcoin and volatility for people who want it in that wrapper. And I think we're going to see ETFs kind of do the same thing in varying ways. The ones that really jump out at me are the ProShares and the 1-in-1 ones you talk about. I mean, I saw those and I immediately thought of Corey Hoffstein, who like popularized this process of return stacking, which basically there's implicit leverage. I mean, you can correct me if I'm wrong in this, but like there's implicit leverage in the way that you use futures. And what they're going to do is they're going to combine Bitcoin exposure, use futures, and basically you put in a dollar amount, you get more than a dollar amount of exposure to, say, the S&P 500 plus Bitcoin or bond ETFs, you name it. They filed for a whole bunch of different things. So honestly, I like it. I think it's pretty unique. I mean, if I was Corey Hoffstein, I would be like, I should probably launch these too. keep exactly what I'm doing and just do the same thing. But I don't know. It's all very interesting. I don't know how successful all of these will be, but I can tell you, like, this is only the beginning of the spaghetti cannon that's going to come out with relation to crypto related ETFs. I think we're very, very, very early days.
I agree. I predicted last week that we would see at least 50 crypto related ETFs this year that would launch. I may be way
I
underestimating.
think you're underestimating it. Yeah, I think you're under. I mean, also, I mean, there's also going to be a bunch of like I think there's a good chance Kraken will IPO under this new SEC. Chainalysis is another company. So even if it's not 50 ETFs or you're are in the money, like I think there's just going to be so many more avenues for investment that like you can do things with ETFs, and it's only a matter of time.
Well, James, always so much fun connecting. Like I said, you and I could talk about this stuff all day long, but I think we did a pretty good job of hitting the highlights. I'm going to call this Around the World of Crypto ETFs with Bloomberg's James Seyffart. James, thank you for joining me.
Thank you so much for having me, Nate. This was a lot of fun.
Hope everyone enjoyed this episode of Crypto Prime. As always, please leave a review or give us a like wherever you're listening or watching. Apple, Spotify, YouTube. We're available pretty much everywhere, so give us a like, and I'll see you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.